Hello traders, Gary Wagner here, just about 12:20 in Honolulu, 6:20 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. January 4th, 2019, and this is the daily report for gold and silver, our weekend review. And we are ending the week with gold trading pretty strongly onto the downside, down about $8.60. Currently printing at $12.8620. That as a direct result of an extremely strong jobs report and statements by Fed Chairman Jerome Powell, which really had U.S. equities turn on a dime from extremely bearish to extremely bullish. Silver also closed lower on the day, down by about 0.25%, a net loss of about 4 cents at $15.75. But platinum and palladium were on fire, especially palladium, up almost $40 today at $12.3980, and platinum up 3.5% or $27 at $8.26. Now that all with some tailwinds of a slightly weaker U.S. dollar. Dollar down about 11 points at 95.76. But as I said, the story is all about the U.S. equities markets. Dow Jones Industrial Average closing up by 746 points at 23,433. NASDAQ Composite gaining over 4% on the day at 67.38. And lastly, Standard & Poor's a gain of about 3.5% at 25.31. So traders, extremely interesting action in the precious metals markets, with gold and silver trading lower and huge upside pops in both platinum and palladium. We are looking at a daily candlestick chart of gold, and what is most noteworthy to me is the daily range that we saw today, well over $20. The high, an impressive $1,300 per ounce, and that, traders, is the highest that this market is traded at since about mid-July or June, of last year, when the market was trading up at around 1312, 1300, in between there, right before it broke to the low that we saw when the market traded to 1162. Given that we had the market trade down about $8.60, I believe that it held up well in terms of our current level of support, which I am looking at $12.7580. That is based upon the 0.38% retracement. And I still believe that our resistance is between 1300 and 1312. I believe that we have a band here, and that's precisely the high that we saw today. Of course, we are long this market from approximately 1268. We have stops at 1270.13. And for right now, my recommendation is to maintain our current long position along with our stop and see how this market reacts as it reopens again next week on Sunday overseas, and then, of course, into New York on Monday morning. And traders, as we talked about at the beginning of this report, there is no doubt we had extreme upside surges in both platinum as well as palladium. We are looking at a daily palladium chart. If you recall, we talked about the fact that we had identified on the weekly charts a pattern called a tweezer tops. Tweezer tops is simply a point in time in which you have equal highs. And traders, when I compress our daily into a weekly chart, as I just have done, you can see where these tweezer tops came in. That would be these 2 weeks right here. That was followed by the last 2 weeks in which we had another testing of the high last week, and then 2 weeks ago we had a high slightly above it, but you can clearly see a major breakout to the upside as the market trades above what I believe was resistance, and now I believe will become support. This is a new all-time record high for palladium futures, $12.3980, up $40, and it is the closest in terms of its distance between gold and palladium in about 16 years. There really isn't that much. We gained, about $45 in terms of that spread tightening. We are really within parity of gold and palladium could certainly overtake gold in terms of pricing, but this is the closest we've seen in about 16 years. And traders, of all the precious metals, it has been platinum that has been under the most severe pressure, breaking below $800. This is a weekly chart. We can see that it came close to $775 at the end of last year, and towards the middle of last year, it actually traded closer to $750. However, we had a tremendous pop. We're going to convert our weekly back to a daily to show you that today's move took it above two critical moving averages, above the 100-day in blue, above the 50-day in green, but it is still below the 200-day moving average. In fact, the only precious metal of the complex to actually be trading below its 200-day moving average. My recommendation, as I said, in terms of our long gold position is to maintain that. We will look to tighten that stop up towards the beginning of next week rather than today. I want to see how it reacts on Sunday. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.